Good afternoon, everyone. Today is Wednesday. It's the 21st of August, 2013, and this is Brian Shannon from alphatrends.net. Let's take a look at these markets here. We did have the S&P 500, the SPY that is, lose $1 or 0.62%. And we remain under that 50-day moving average. Now, as I often say, the direction of the 50-day moving average is more important than a couple closes below it, but it's not a reason to buy. We don't buy at moving averages. Instead, we take a closer look at the action there to see if the market is in fact finding some support. The 5-day moving average might be turning sideways and then begins to turn higher. Instead, what we see is we've had this pattern of lower highs and lower lows. Today we had a rally. It came right up to that declining 5-day moving average and also fell short of the recent the highs for basically this week here. And the S&P 500 sold off very sharply right down to close to the end of the day. It's kind of interesting when you look at the S&P 500 on the intraday chart for today. We saw a sell-off that came almost precisely to that daily S2 level. And the rally came almost precisely to the declining 5-day moving average. So if you're not using these tools and you're trading on a shorter term basis, you're really missing out, I think. The volume weighted average price failed to hold, and this pivot here was also a place where it looked like the market might have found some support, but then it failed from there. So where are we overall? Well, if we take a look at this 65-minute time frame, which is kind of what we've been referencing to get a bigger picture reference based on the lows from June, the volume-weighted average price since those June lows is also an interesting level because that's exactly where we have that 5-day moving average now. So the average price paid for the SPY since the low in June is actually right here at about just under 166. So that means the sellers have gained the control. We saw the support break at 168 and a half, and the sellers are still in control since that breakdown. Now, if we take a look at Fibonacci to get an idea of what a normal type of pullback might be, or what would consider to be considered a pullback, anything down to the 61.8% retracement level, which is 161.34. And if we look at the longer term trend line here, you can see it comes in pretty close to that level, the 161.64 level. So we've got this longer term trend line off the lows from last November and from the recent low we saw back in June. So when we look at this market, we see that intermediate term remains guilty till proven innocent with a declining 5-day moving average here, and that lower lows should be expected. The buyers tried to gain back control off that news. It failed to hold, and now the only thing that's going to change my mind and put me more at ease for the long side is if we can get back above about 166.30 and hold there for more than a half hour. Now maybe the market gaps up tomorrow and does that. I don't think it's the most likely scenario, and even if it does get above that level, I think it's only good for a bounce up to about 168 and a quarter, and then we'll have to see how it might react to this prior level of support. So the main takeaway here is that we're guilty till proven innocent with a declining 5-day moving average. There are great day trade opportunities if that's what you're interested in. We talk about those in the chat room at Alpha Trends, and we talk about the bigger picture every single day after the close with these videos and stock trading ideas as well. Now the NASDAQ has been kind of range bound in here, that the prior support of 76 has held as resistance and did once again today, and now we are also down near the low end of this range at about just under 74 and a half. So when we look here, intraday we got right up to the high end of that range and we closed at the low end of the range. This prior support acting as resistance. When we look at the bigger picture in here, that longer term trend line is really pretty far away down here at about 71.30, and I don't think it's reasonable to look at that as a potential target. Instead, we would look at something like the volume weighted average price since the June lows, and that level is right here at about 74 and a dime. And we can also look in here at the Fibonacci as we did with the S&P 500, and what we'll see is that the 31.8% retracement gets us down into that level as well. So this is a potential area of support based on the volume weighted average price since this low over here, and since the retracement, the 38.2% retracement. And interestingly, when we look at the daily time frame, you can see that's right about where that 50-day moving average is as well in these prior lows. So 74 looks like a very reasonable level for this market to come down to in the pretty near term, I would say. And just thinking of a bigger picture, if we get a drop down towards there, then a bounce up that shows a lower high, we might even be in for a bigger head and shoulders pattern, but that's to be seen. That's down the road. So this market is guilty till proven innocent. We got above the 5-day moving average, but the 5-day moving average is declining, so it's guilty till proven innocent. And if we get decisively below 75.30 and hold below there, I think it seems pretty obvious that we would be going for $74 a share. If we were somehow to get back above about 76 and a dime and hold there, then perhaps we're just going to see more of a correction through time. But innocent, guilty till proven innocent in the intermediate term. The Russell 2000, we had been talking about this head and shoulders pattern and basically how the price objective was down about where we are right now. We've seen that this market tried to recover yesterday and today, but again, with that declining 5-day moving average, it's guilty till proven innocent, that these attempts at a bounce should be treated just as that, as an attempt, and with a lot of suspicion. We saw, on the 1 minute time frame, we saw that post-Fed minutes rally completely fail here late in the day, and that shakes people's confidence. So when we look at the 65-minute time frame in here, we can go back and take a look at the average price since the June lows, and we're pretty much hanging right on it at about 101.80-ish. And then we can take a look at the Fibonacci here, that we can take a look now at the 38.2% retracement. It just seems to me as though this market is likely to go down towards probably at least the 50% retracement. We saw a little peak over there just under the $100 level, and that's a 50% retracement. So getting down towards $100 a share would also, put us close to this longer-term trend line. That'd be about 99 or so. So it looks to me like the Russell 2000 is still guilty till proven innocent. Choppy in here, but I would be very cautious about this market. If it was to get above and hold above 102.50, perhaps then we're going to see more of a time correction, but it's still looking like it's trying to hold that 50-day moving average, but it doesn't seem likely that it will hold there. The semiconductors broke their important support level at $38 a share, and you look at the longer-term trend line here from last year's low, and we're right on it. So we're right on that trend line, and we have the potential for support in here, but we're not seeing any support. In other words, when we look at the 10-minute time frame, we saw a sideways channel that kind of looks like what we're seeing in the NASDAQ here, but just resolved itself a little bit earlier, and that is we broke the low end of that support, tried to come back up, but it became resistance. So with a declining 5-day moving average, I wouldn't expect that this trend line will hold. I think that it's still very likely that we'll come down towards $36 a share. In the financials, we've got this longer term trend line right at about the 100-day moving average, and that's approximately 19.5. So the financials, we've seen also that we have a pattern where we have a declining 5, 10, 20-day moving average. We have lower highs and lower lows, and until that pattern breaks, we're going to stay guilty till proven innocent in the intermediate term. Looking at a 30-minute time frame, you can see that support levels, that's basically stair-stepping lower. That, if you look at it from the sideways, it looks like a staircase where prior support is acting as resistance, prior support acting as resistance, and that's the classic hallmarks of a downtrend, lower highs and lower lows. So the intermediate term still in a downtrend, volume-weighted average price since the lows up at about that 20.05 level, and the Fibonacci off of here, we're trying to hang right on that 50% retracement. The 61.8% gets us down to about that 1950 level, and it does seem likely to me that we'll see $19.50. If we're to get back above about 20.05, then maybe we're done going down for a little bit, but you have to look at this market and say that it's guilty till proven innocent.